Hello, everyone, and welcome back to another edition of the Daily Crypto Byte. Today is our 101st episode. We're trying out a little something new today. New streaming service. As you can see, we got a different sort of layout here. Should be good. Might be a little rocky on this first day, but in the end, it will definitely be worth it for a better quality broadcast. But without further ado, we had a sharp sell-off last night in both Bitcoin and ETH and a lot of alts across the board. We broke some very critical levels below 30K for below 30K for Bitcoin for the first time in a very long time, over a month and a half now, and below the 1750, very critical level for ETH as well. So we'll talk about that and more today. And how are you guys doing today, CJ, John?
Doing well, sir. How about yourself?
Not too bad, not too bad.
Need to see a rebound.
The sell-off hurts, but this was kind of anticipated. We've been, lingering in this range for a while. CJ was talking about that descending triangle, and it seems like we're finally breaking out of that. So, CJ, is that basically what you're seeing? A breakdown from that descending triangle? Can we call that formation played out?
Not the complete pattern, but I will share my screen here with the new sharing capabilities. Pretty cool.
See it.
And how's that?
Looks great.
All right. So if we go down to the Market Rebellion charting platform here, you can see this descending triangle that we've really been talking about for quite a while. And you can finally see the confirmation level that it broke, falling below 31K. But then really the completed pattern of this doesn't occur until about 25K. Of course, doesn't mean we have to go that far. We could hit this first leg down, which is about 28K. I definitely, I'm going to think about lightening up on the puts once we get to that level, just because this trend in and of itself is getting very exhaustive. Although, it's obviously a downtrend, there are instances where you're going to have reaction rallies, right? Nothing goes in a straight line up or down continually. And so tomorrow, or specifically 7 p.m. Chicago time later today, we're going to get a TD by 9 on the sequential indicator on Bitcoin. A lot of these times, they've been serving as relief rallies, essentially. So we may get a move to the moving average. That kind of remains to be seen, but that's something we'll be watching for later this evening as well. And that we'll talk more about in the crypto room.
Yeah, absolutely. And one other thing that I definitely think is worth mentioning today is a relatively big piece of news that hit late last night, and that's out of New Jersey and BlockFi. So let me pull up this article real quick, because definitely worth mentioning in my opinion. But BlockFi ordered to stop opening new interest accounts in New Jersey. So this is some extreme FUD coming out of New Jersey. BlockFi is a massive company, a legitimate company, and they're taking very harsh sanctions against them, disallowing them from opening new interest accounts. This is big news, not surprising given the current market conditions, but curious to hear what you guys are thinking with this kind of FUD related news piece.
We know that New York, for instance, guys, has the strictest FinCEN rules. And it's why the sponsor of this program, Voyager, who's been trying for almost 2 years to get the license, New York is very stingy with those licenses. And so the only state in the union that Voyager can't do business in is New York. That's not New Jersey. I realize that, even though many times they're sort of synonymous because bridges and tunnels and all that kind of thing. But when we're talking about states' rights and the rules that they can set about who can and can't do business in their state, I didn't see anything in New Jersey's laws that would allow them to basically kick BlockFi to the curb like this. Especially since it'd be one thing, I guess, Monty, if you had a company like BlockFi that, similar to Voyager, pays interest on deposited crypto. And if they missed some payments to New Jersey residents, I can certainly see people coming after them hard. However, there's no such rumor or FUD about that. So I don't really understand what's going on with them saying to BlockFi, you're out of the state, basically.
Yeah, it does seem odd, John, especially considering, it's not even a wider ban on, crypto exchanges or anything like that. It's specifically targeted against BlockFi. Now, obviously, they did have some issues a few months back when there was that massive surge in retail demand. I know I think they paid out improper interest amounts to a few users. So maybe it has something to do with that. Maybe, the New Jersey legislators are just thinking that, if this happened now, it could happen again and it could be worse. But I think what's going to be most telling from this news piece is kind of what happens next. Will they take these similar, restrictions against other companies that offer interest on crypto? Or, will there be some severe outcry amongst BlockFi users in New Jersey? And, this becomes, just something that we're looking at in the rearview mirror as kind of just another blip FUD news piece. I think that, given the fact that BlockFi is a massive company in New Jersey, they do have a large interest in crypto. A lot of trading volume does come out of New Jersey. So it's going to be interesting to see what sort of implications this has. But given the current market conditions, and I guess what we saw from BlockFi just a few months ago, I guess that's kind of what the New Jersey lawmakers are seeing when they're laying down this new rule.
Yeah. Well, it'll be interesting what legal precedents they're citing for that. Because as you guys both know, my wife is a lawyer and was a judge. And obviously you can't just willy-nilly do something like this to a legitimate company unless they've violated some part of the law. Not paying if they say they're going to pay, that could be one of those things, but we haven't heard that, like I said. So the fact that they pay an interest rate so much higher than the nothingness that people get in the bank for deposited dollars seems odd to me. And New Jersey seems like an odd state to be doing it, quite frankly. But that's why we play the game, as they say.
Yeah.
I will say, by the way, that the game today is much more interesting than yesterday because we had that 900-point decline yesterday in the Dow. It took everything down with it. Obviously, the NASDAQ was down 200. The S&Ps were down 88 or 90. All that kind of stuff. Took crypto down with it. And now combination of, we probably were a little ahead of ourselves, they thought. And we were looking at a 425-point surge in the Dow, 50 points for the NASDAQ, 35 for the S&P. None of those are full takebacks of the damage from yesterday. But I think some of it is also, believe it or not, I'm going to say it, part of Blue Origin successful launch and successful return of Jeff Bezos, his brother, and 3 other passengers that were part of that Blue Origin flight. And I think that, people kind of get jacked up seeing us successfully do a space launch with human beings. They certainly like it when Tesla does it, and they've done it many more times than Blue Origin has. But jumping into a plane and flying to the edge of space as Sir Richard Branson did is not nearly the same thing as going off a launching pad on the top of a rocket like Bezos and those 4 other people did.
Oh yeah, it's incredible. I'm glad to hear they made it back safely. But while they're busy going to space, a lot of these assets that we're looking at are crashing very hard. And I want to talk about ETH real quick, because this one, I'm actually kind of more concerned about ETH right now than I am about Bitcoin. And I think that's just because of the fact that Bitcoin, we broke some very critical levels, but ETH, I think, could potentially have a long way to fall. And the correction, when we do hit that bottom, I think we could even see a wick to levels as low as possibly 1,300. But I want to talk about this level right here. This is one I've been talking about a lot. That's 1,750. It's not exactly like a fine tip point, but it's this kind of, you can see in the beginning of the year, this was a very critical level to the upside. It took, the presence of institutional capital to get us above this point. Retail capital was working for a long time to get above, the price point of 1,500. It just didn't happen until we got that influx of institutional capital that carried ETH to new heights. Obviously, you can see here, this was a critical level around this time, acting as both support and resistance on multiple occasions, and kind of acted as like a new price floor before we went higher. Now we've given back all the gains. We're back retesting this level, and it does look like we're set to perhaps break through and close our daily candle today at around 8 p.m. below this 1750 level. If we get a candle body close below 1750, I think the likelihood of retesting further levels is further lower levels is very high. This level has held up several times over the last month with multiple occasions of wicks down hitting this level and buyers quickly stepping in to return price to its previous levels. We're not seeing this time. CJ talked yesterday about this TD sequential buy 9 right here. When we are hitting these in the past with ETH, we're getting some nice bounces, indicating that there were some buyers left in the market at this price point. They're willing to swing trade ETH. They didn't think that there's a possibility of, an interim crash. Now we got this TD buy 9 and we get absolutely no bounce from it at all. I think that's indicative of the fact that there's very few buyers left. People that were content to buy this dip, a week ago on this TD, or 2 weeks ago on this TD buy 9, are now looking at the market with a lot more fear. So I think that chances of retesting lower levels of perhaps 1,500 and even as low as 1,400 or 1,300 are likely if we close below 1,750 with today's daily candle.
Thank you for that, Monty. You mind if I address one question from the audience as well? I do want to share a chart of the S&P very briefly as well.
Yeah, go ahead.
So just let me know when you see this chart behind me.
Yep.
So cool. So we're looking at the SPX and a nice moving average below it. And every time we've had bullish engulfing candles or bullish hammer candles right at, near, or below, these levels, essentially at a bottom of a downtrend, we've rallied to new all-time highs every single time in the S&P. And so, the trend is your friend until the end, but it does look like we're getting somewhat of a bullish engulfing candle or something bullish off of this moving average and potentially may rally to new all-time highs. Of course, we're not there yet, but the question that I wanted to address in the audience is from our good friend Bob, and it says, what do you guys think about the factors here which will potentially get the ship turned around? Because right now it looks very depressing. What positive circumstances or news could arise potentially that we're thinking, if anything?
That's a great question. First and foremost, I'll start by talking about the SPX and what you were just showing. I think it's encouraging. We're getting that bullish candle. I know, CJ, you've been talking all week about, waiting for a bullish engulfing candle and what that's meant historically for the SPX in just the last few weeks when we've kind of come down and retest that moving average. I think if we can get maybe some continued bullish price action tomorrow in the S&P, that could maybe bring Bitcoin back up to those, above 30K. But speaking to the, more long term, I do think it's inevitable that we retest lower levels of 25K. So what could be the catalyst for the next leg up? I still think it's going to be institutional interest in crypto. We talked yesterday on Trade the Chain about a DeFi index being launched on Grayscale. We talked last Friday, about Bank of America opening up institutional futures trading to a lot of their clients. So I'll be watching CME open interest volume. I'll be watching to see, if there are other big players like Bank of America or like Grayscale opening new trusts. I think that's typically a sign that, we're ready for that new wave of capital to enter the space that will kind of provide that next leg up. So I'll be watching the big institutions, the heavy hands, seeing where they're putting their money to dictate when we're ready for that next leg up.
Wow, this background looks so much better when John's not here. But in all seriousness, I totally agree with you. And, if we do get a bullish engulfing candle on the SPX by the end of the day, I would be a buyer with a very tight stop loss because I don't want to buy the dip, or I don't want to buy a falling knife into weakness, but I am willing to buy into strength here on the dip. But, even Tom Lee, we have the foremost macro analyst saying, this month is not the month to be a hero. So when Tom says things like that, I do tend to listen. But for that reason, I don't really have a doge of the day today. Still holding puts from, last Friday, kind of using them to hedge against Bitcoin and Ethereum, maintaining certain long-term holdings as well. So what about you, Monty?
No, I'm glad you mentioned that Tom Lee quote, CJ, because I think him saying "don't be a hero" that perfectly sums it up. Retail traders are not going to be the catalyst to drive price up in this next leg up. Like, you can try and be a hero all you want. You can try and perfectly buy the bottom. That's not how I'm going to play this market. The institutions are going to be playing it as, once we hit the bottom, once the retail has capitulated, they're going to start buying in at a very reasonable cost given the price action we've seen over the last few months. And then the confidence and the stability will be brought to the market by that institutional capital, which then in turn brings in the retail capital, and then we repeat. So I think the fact is, we need that institutional interest to come in first. The retail money isn't going to get it done in the time being. So just wait, be patient. I know we've been saying that for the last 3 months, but if you've been being patient and, sitting on some dry powder, you're almost at that point where you're going to be ready to put it to work. And, I think that over the next, 3 to 6 months, there's going to be a ton of money to be made in this market. And, maximizing your dollar cost averages will, I'm sure will look, great in 12 months. You'll see, how appealing these prices look, but it's hard to have that sort of time preference. But yeah.
Thank you all for watching today. Don't forget, if you'd like to see trade insights or just talk to Monty and I in general about education or analysis, you can try our crypto room down below for just $1. You can get that for the first month. Also, we want to say thank you to Voyager for sponsoring this show. Don't forget, you can earn up to 10% interest on USDC. If you hold over a certain amount of Voyager token, VGX, they'll give you a 1% interest boost on all of your holdings. Also, don't forget DOT, 12% on Voyager. So really take advantage of those interest rates during the bear cycle or during kind of just bear market conditions in general. But just want to say thank you to everybody for that. And that's all I got, Monty. Any wise words of wisdom you'd like to leave us with here before we depart?
Nothing wise. If you're a New Jersey, person watching this and you're looking for a new brokerage after BlockFi is getting shut down, check out Voyager. Check them out. But anyways, we'll be back tomorrow. Hope you guys like the new format. We're going to continue working on it and improving it. So stay tuned for some more cool improvements. But thank you guys as always so much for watching. We will see you again tomorrow.